Indeed, a very warm welcome to you. This is the Business Hour podcast. My name is Mbogoh, and as you can rightfully see, this is an amazing space that we are recording at, and this is in collaboration with Workstyle.africa. It's a co-working space for anyone who's looking for somewhere to work from. If you do not want to work from home, this is the space for you to be at. And with that being said, let's get straight into the show. And today I will be speaking to a very good friend of mine, none other than Eric Asuma, who's the CEO of Kenyan Wall Street. And he has a very interesting story. He will be telling us how he transitioned from being a stockbroker to being a company owner and the number of companies he's running currently. But before we get into that conversation, let's get our quote of the day. And our quote of the day says, "I cannot give you the formula for success, but I can give you the formula for failure, which is try to please everybody." And with that being said, Eric, karibu sana to the program.
Thank you very much, Jimmy.
I know.
Glad to be here, man.
Karibu. You know, this is, we've had conversations on the side. Mm-hmm. We've talked about investments in this country, but very few people know about the story of Eric Asuma. So, and that's why you're here today. You know, this season we are focusing our theme on the idea of entrepreneurship and the challenges and the ups and downs, because again, it's we've heard about this complaint, people saying this is a microwave generation. They want things to be done so fast. But so Eric, first of all, just tell me, how did you transition from being a stockbroker to being a CEO? Let's start there. I think that's where we need to start this conversation.
Interesting. You know, so around 2014, I was an intern at our local stock exchange. That's the Nairobi Securities Exchange.
Yeah.
So at the time, I was still in campus at the time, but I had the opportunity to work there. And when I was working there, what happened is that my friends thought because I worked at the stock exchange, I had access to information.
Yeah.
That's one. The other thing is that while I worked there, I noticed a pattern of whereby people are walking in to the exchange. So every day at around 10 or during the health break, I will go to the reception and just study the pattern around, like, what were the walk-ins, where were people walking in.
Yeah.
And I realized that people came in to ask, how do I buy shares? How do I invest? How do I get information around where to invest? What assets do I invest in? And then out of that, now the third thing that came out of that was that I noticed at the time our stock exchange things were a bit manual, in as much as they had automated things like trading, placing of orders and the rest through different brokerage houses.
Yeah.
The information bit wasn't automated. A good example would be Company A has released some material information. So say Company A has appointed a new CEO or management or board or financial results.
Yeah.
So the typical way that the local stock exchange used to do it, or the local investment industry, the company secretary of that company will send a hard copy to the exchange, to the regulator, that's CMA. And then once both sides have signed, send that to the CMA, to the reception. Then the person who sits at the reception will compile all these, hopefully before the end of the day, send them to the trading room for now distribution to the media, to the industry. And imagine of important information that can actually move share price.
Yeah.
We've acquired Company A, right? Then this information comes to the reception, sits there waiting for, say, this person to scan, then push them in the evening. This material information that should be automated and should go on a real-time basis. So that's how actually the idea of around Kenyan Wall Street came about.
So basically what you're telling me is you went to NSC, you saw this lag, because again, let's say something like the information of a new CEO or a new or an acquisition, like you said, rightfully said, this is information that has the potential to either push the share price up or down.
Yeah.
And so when you realize that this information is taking longer to get out there, that is the origin of.
Yes. So I suggested it to the management that why don't I do this for you?
Yeah.
And you know how corporate organizations work, they're structured, so you can't do things easily. So I decided to do it on my own just for my friends because my friends wanted this information.
Yeah.
So actually Kenyan Works now began as, it was a basic Twitter handle.
Ah.
Yes, so it was a Twitter handle that, so I thought of the name actually when I was in a matatu going to work. So listed down a couple of names, said now out of all these names, I think Kenyan was ranked at the top after asking my friends which name would they prefer. Then actually now started posting on Twitter.
Yeah.
That was in 2014. So nothing serious then because I was working and I also had another business on the side. So this was like a hobby or something. So nothing serious. I never even intended to build a business or anything out of it. It was just out of necessity.
Yeah.
My friends, I saw the need. There was the information I had access to. So began as a Twitter handle. So because I could go now after I noticed people at 10, as in people could walk in, they don't have the information. Went at 10, helped the receptionist try push up this information much easier to the rest of the team. Then while I go through this information, I could come across very material information, like extremely important information that it's not in the public, yet it should be in the public domain. Take a picture, post on Twitter.
Yeah.
Then that's how it began.
And I'll tell you this. I remember my first interaction with Kenyan Wall Street was actually on Twitter. And I remember then I was in a certain newsroom, which I'm sure you know. And then the conversation around that time was, who is this Kenyan Wall Street person? Where do they get this information? And then, so how did you then convert those questions into making sure that Kenyan Wall Street is a credible source?
So what happened is that while I did that around 2014, so it was more of like a trial and error thing. So I wasn't sure that it's going to be a business but I thought after doing it, seeing the reception, with time I began receiving queries from foreign investors, and this not just institutional foreign investors who have an exposure in this market. So this will be your typical fund manager from the US or Canada who has an exposure in, say, the telecoms or banking industry.
Yeah.
So they could inquire, I have an exposure in this particular sector. Would you mind doing some sort of research or intelligence
on what's happening?
Yeah, on what's happening. Then I will pay you for it.
Yeah.
So I did not have the experience to do it. So I actually never took any money. So my typical response was, I'm doing it for fun. So I don't think I can make money out of it. But continue doing it. So after I left the exchange, I continued posting the news. Now I'm not a writer, right? I'm not a journalist, but maybe my background is in I did Bachelor of Commerce at the campus, but I was lucky because my parents ran a couple of businesses. So while growing up, even I think from 5 years, so I used to participate in all my parents' business. So I think from the earliest business that my mother ran, she made sure I was involved. I think with time she ran a couple of other businesses trying her hand. So she made sure I was involved even while I was still in primary or high school. Same as my father. So that's the at least that's the good experience that I had. So basically, it was easier to transform something into a business.
So Eric, basically you want to tell me your business acumen is from the lessons that you picked up along the way from your parents' businesses?
Actually, it's actually from my parents' business. So from actually from my mother most of the time. My father is a government employee. My father has worked for the government for that. But he also had a side business, a transport business, running a couple of matatus on the western side of Kenya. So with time, even while in high school, I could sneak in and help him manage that. But most of the business experience came from helping my mother run her businesses.
All right. So we'll get to the business in a minute, Eric. But help me understand now. You're doing this on Twitter. You're doing it for fun. At what point then do you stop and say, actually, I think I can take this forward. I can make this a business that actually survives on its own?
Interesting. So that point, I think, was in 2015, December. Around 2015. So after I left the exchange, I went to work for a South African brewer called SAB Miller. So I used to do Kenyan Works on the side, so it was basically a bit of social media, nothing much. Got in one intern to help me figure out around how to write because I was employed.
Yeah.
But I was guiding the person who was working for me at the time.
Mm-hmm.
So what happened is around 2015, late 2015, while I was working where I was working, I decided I think it's time I wanted to find something that I could spend most of my time to do. Initially, I tried my hand in a business that used to supply government sort of tenders. That didn't work. So by the time when I quit SAB Miller, I'd saved some cash. So I opened a bar.
Okay.
Yeah, I opened a bar where I used to live along, just in Nairobi. So I thought at that point, this bar would at least generate some enough cash to take care of me while I build this Kenyan Walls thing that I never knew where it would end up to.
Yeah.
So I set up the bar because I used to work in a brewer, so it was easier to know.
You had basically the background knowledge. Yeah.
So I set up the bar, paid some rent, got in some liquor and the rest, and then thought this would enable me survive. So what I will do is work in the morning from home during the day to just build the initial structures of Kenyan Wall Street.
Yeah.
Just figure out what I'm going to do, the plans and all that. Then in the evening, I will go to the bar because bars are usually opened during the evening hours most of the time.
That's when the peak hours are.
Yeah, so that's what I used to do. I did it for maybe about 4-5 months. But then my dad asked me, this bad thing that you're doing, do you think it's sustainable? And given that, my parents are Christians, and some of these virtues are against, their religion and all that. So he told me like, what do you want to do? I told him, look, there's something that I'm really passionate about, which is basically I have this thing that I want to turn into a business. The whole business is either transform it into an investment company. Still no idea. Things weren't clear at the time. But I remember what I mentioned to him is either an investment platform, a news platform or something. Then he told me, how much do you want to go into it full time and close this bar business? I told him, well. So what he did, my father gave me a loan.
Okay.
So my father took a circle loan of about $1,000. That's like 100.
That's like 100,000, yeah.
And gave me to build the first initial website of Kenyan Wall Street. So I looked for a website designer.
So, but let me ask you, in terms of the reception, because again, in 2015, we had the mainstream platforms, that is the Nation, the Standards, and who not, who were only trying then to get their content online. Online wasn't, digital platforms weren't such a big source of news then. So how were you able to sell this idea to them to get them to come and invest in it?
So I think, as I've always said, I think I'm always lucky. Like my father. So my father, every time, I think when I had it, so my father told me, he did not have a, but at least he had a gist, interesting. So he told me, look, I'll try get for you some loan. So he told me, how much do you need to set up? I told him I need maybe 200K or something. He told me, how much do you have? I told him, I have some savings here. He told me, I'll take for you a circle loan of about 100K Kenyan shillings. Set up the initial website. If it works well and good. If it doesn't work well, probably go find a job in one of these big institutions. So that's what he told me, actually. I told him. So the good thing, he supported me from that early stage. So took that cash, built the initial sort of webs. So the thing that probably made it pick up very fast is that we had already begun doing some work on social media. So it was easier to build a website and then now direct people to that website.
To the website.
So that's what I actually basically have. So after the first month that we did the website, at least got 1 or 2 people again to help me just build the content side. It actually picked up very, very fast because I think in the first 2 or 3 months, we had the likes of CNBC picking our content to republish on their websites. I think we had the likes of Bloomberg putting our content on the terminal. It really picked up then much faster than I had expected.
You did this for a whole year. You did not have partners. You did not have investors or advertisers. So at what point then did you sit and think, okay, for this thing to continue, for this platform to continue being sustainable, I need to have people come on and advertise?
So it was natural. It's not that I'm the one who drove those particular conversations, to be honest. So what happened while we did it for that particular year,
Mm-hmm.
one of the actually one of the largest listed companies. So their investor relations team did a research around when they search share price, who mentions their name online or whatever.
Uh-huh.
They realized that Kenyan Wall Street drives most of the conversations around that particular company. Yeah, so they reached out actually.
Mm-hmm.
They said, hey, we would like to work with you. We'd like to work with you. So, and if you'd like to work with you, I think usually a client sent you a brief in terms of this is what you will want to do. I think they were releasing sort of results at that point in time. So from that brief, it was necessary we had to register a company.
Oh, wait, sorry. Let me take you back, Eric. At this point, you only have a website. You haven't registered a company.
No, I never registered a company, actually. So I registered the first company in 2016, actually. So, and it was driven by the
client.
Yeah. Yeah, and a client and maybe a partner that also wanted to partner with us, as a foreign company that also wanted to partner with us. So if a client wants to pay, say, some huge sums of money, they'll need you to have a properly registered company.
Yeah.
If it's a listed company, they'll need to work with a company that's actually registered. So that's what drove us to form a company. It wasn't that I formed the company before building the product.
Okay, that's actually an interesting perspective, because I think most entrepreneurs now are trying to look at the end goal. The end goal is to use this company to make money. That you're willing to skip on building the structural integrity of the company itself. And I think that is one of the things that I think you got right, in terms of, let me create enough content that this content now will become the key attraction for anyone who wants to work with us. And so, because now, from what I'm getting, Eric, at this point, this is your second company. First, you had a bar, which you were told
it wasn't a company. It was, I think this was like my third business.
Okay.
Yeah. So the first business was a tender business. So I used to supply government. So some point in 2013, the government came up with a program called Youth Access to Government Procurement Opportunities.
Yeah.
So also at that particular point, I was lucky. So a friend of mine, the mother used to be a senior government official. So she knew about this program before it was in public.
Yeah.
So she advised us to register a company so that we could take advantage of some of this opportunity. So that was my initial company. Registered, I think, was in either third year or second year in campus.
Yeah.
So that was the first one. However, it did not pan out as I'd expected. It failed. Then now the second business was a bar business, which I tried, but also did not pan out very well. Now the third business was now Kenyan Wall Street, which now I formally registered in 2016.
Okay, so help me understand this, because again, you will, and I'm sure this is probably something you've had or you've experienced yourself, the fact that a lot of entrepreneurs, so many of them will say, at some point I ran out of capital. So your initial capital was 100,000, which, from what you've told me, you used to set up the website.
Yeah.
So in terms of that 1 year, the day-to-day running of the website and getting these interns to help you, where did you get the resources to run it?
So the way I did it, so initially the person I looked for, a guy that I knew actually looked online, reached out to different people to give me quotes of how much they will help me build the website. So at that point, I got in a few quotes, then got someone that at least we had some good understanding, paid him half the cash, right? Then agreed I'll pay him the rest later or in installments.
Yeah.
So also the interns that I got to help me, I paid them like just small amounts to keep them going. Then hoping that initially I thought the business, I will get either an advertising deal in the next 3 months or so. But things in business, I think one of the things that I've learned is that it's never short term. You can plan in your mind. I think in your planning, you can think you probably might break even or make some business in few months time, it might take even longer than you had expected.
Yeah.
So it took a bit longer. So at the point that I got one of my first contracts, I think it was some huge amount, I paid off this developer who was maintaining the website.
Okay.
And then paid off these people who had been working for me. So it wasn't much that I was paying them.
Yeah.
So at least I was able to clear off some of these debts.
Now you've touched on something, and which is one of my next questions, is after how long did the company now break even?
Interesting. It's never broke. I can't say it's never have we ever broke? Not really. At least it's been, I think, I will think of it as when was it a bit sustainable, so that we can start getting regular income. So actually after 1 year, after that particular contract, in the following year, that was 2017, now revenue was a bit constant now. The client that we worked with began referring other clients, and it really picked up. That's now when we began thinking of how do we grow a team, how do we build a business out of it, and like build proper structures. So probably picked up properly around 2017. Now that's when we began getting regular business.
Yeah. When I met you, that was around 2018.
Yeah.
And at this point, I remember the business was sustaining itself.
Yeah, I think by 2018 we were about 18. We were about 18 of us.
Yeah.
It had grown very fast at that point. And probably what people don't know is that while you were doing the media business, the whole goal wasn't to build a media business, to be honest. It wasn't. If I thought of it in terms of now what particular business do I want to build, I always thought of it, build this particular audience, and then with time find a product that like a pain point that they have, find their biggest pain point, then try to solve that. So the media business helped me find the biggest challenge that this audience had. So which is that during that time, while we were doing the content side, if you remember correctly, we were actually working with a number of stockbrokers to build their software solutions. So because a client will come to you, Eric, I will want to advertise. But when you look at their business model, they even don't have basic things like a website or an app. Then, so you have to go help them digitize the entire back office processes. And then that's now when I began of how do I build a tech business out of this, like in that can be a bit scalable. So now that's when I thought of how do I get a team, how do I get, say, technical co-founder to help me build all this. So that was around, say, 2018 now when we began now putting up like a proper foundation to build a proper business out of this.
Eric, from our conversation now, I get to understand the thinking behind the process. But you realize with so many entrepreneurs, once they feel that this business has the potential to be scaled up, the first instinct is to try and get investors. Is that a thought that crossed your mind, and why didn't you do it?
So, to be honest, it crossed our minds, but I think at that point we tried talking to investors, telling them about our vision, not just about the media company, but our broader vision to transform this into a fintech sort of media play. But most of them never understood what we were trying to do. And to be honest, not that we had built enough traction to warrant some of these huge investors to come in. So the good thing is we were lucky. We were getting some revenues from the media business. So we never took it seriously to bring on board, say, investors. So it wasn't, maybe I talked to one or two investors. And then at that point in time, when an investor reaches out to you, and if it's an investor based out of Kenya, they'll ask for details that you don't have. Show us your 5 years audited statements, 3 years. Yet this business has been in existence for 2 years. And that at that early stages, we even don't think of how do I have like proper finance systems. So when a client or when a potential investor asks you for those details,
you don't
the
have.
conversation that just dies because these are things that you don't have.
Looking back, Eric, and when you look at the early stages when you were beginning off, what are the things that you wish you knew when you were starting off? And things especially around running a media company. Because see, for you, for instance, it wasn't necessarily a media company that you were building, but that's what it eventually turned out to. So when you look back in terms of the lessons that you've had to take, what are some of those things that you really wish you knew when you were starting off?
I think maybe two things. I think one will be around structures. So in as much as the business is small,
Yeah.
even if you got say 10K worth of deal or whatever, it's good to be accountable. Make sure you separate the business from from me. So in a way, you have business accounts which are like totally different from me, properly managed, or even get. So that comes to a point of get proper people to lead, say, the finance department.
Yeah.
Get a proper accounting person. Get a proper, say, people to run the finance team, manage the finances, the HR bit of it. So I never thought of it, to be honest, when I started out.
Yeah.
But I wish I'd learned that properly even from day one. It's important, and the reason I'm saying this is that much later, after we had grown a bit, we had grown massively. Now we ran into these problems with the government, the tax authorities.
Yeah.
So, now which means you have to spend so much money to clear the tax arrears plus interest that you never cleared all these years. So imagine if I knew from day one,
Yeah.
sort it out.